Good morning, MMTs. We have now been open for 21 minutes on the opening bell of an options expiration. And what we want people to know was the left elbow gap down in pre-market. That's where the action came. That's where they slid that bid on the famous short 369. They made that bottom teeny line. You're a teeny higher up here, and you're elevated there, and you're 0.55 versus 0.46 off the bottom. Watch that. If you were short, you needed to come up when it got above the teeny line. That 3-minute quad 5 diamond alert right there took out that bottom right here, and that's why you would cover the short on this 12 bar, okay? Because it took out the triple diamond right here, and half of the price action bar went above here. So this is the important thing about understanding when to cover the market and take the majority of that 36912, those profits off the table, and you're coming up to that teeny line. Okay, so that's the NFLX gap down NFLX, and that short was coming out right there, because if you don't, you're going to give up all your profits. And not only that, if it's going to be a rollover Beethoven here in the brain, that means that that IR would not go above 35 and stay above it if it's going to be really weak, and that 0.45 is still in a negative ratio territory. So that means that you can always look and examine. If we go weak again here and we start to go towards 0.55, you can look at a second entry short. So it's very key to understand where this particular ratio is. If it's running toward 5.5 and staying more negative than coming off of the bottom, going back toward that 0.55, then there's a lot of weakness in the price action at that teeny line.